Good morning, everyone. Today is Friday. It is May the 10th, and we have imposed another group of tariffs, and China's still coming to the table. Listen, a lot of people have said it, and it's absolutely true. China really needs this deal. They do. And so they're going to make a way. Something very interesting got said, something like, you know what, there are going to be a few exemptions, just some pretty interesting things that are going to do to get this deal potentially done because China wants it done. And take a look at what happened yesterday. We did fill the gap, and this area above 28.36, super important all the way down there. If we were taking a look at weekly charts and monthly charts, we would see that this region is very important. And what we've done through the month of April is just break through it and really rocket up the side. I don't think it's unreasonable to think that we fade here, but there are going to be a lot of buyers sitting here. As you know, our swing system has brought everything down. Not the system itself, certainly, but price action has followed the system from Metastock, bringing it right down into the target at 28.40. We're going to be looking at this level that's going to be really big for the buyers. If they lose it, they're going to try and retest it. So this entire region here that we can see down in this area becomes a bounce pattern, so that if it fades into this zone, you want to watch for the shift in the change of whatever MACD that you are looking at in general. All right, that's going to help you. Today, holding above 51 into the pre-market, going to give us a pretty good shot at some kind of bounce. I think traders are going to be very skittish today. They're very likely to sit in this zone and not move until more shakes out. But anytime you make a proposition before you design a trade, you've got to think about, if you're wrong, what's going to be visible. And if I'm wrong about this motion, this morning we're going to lose these levels, slip onto a tighter time frame, watch the bounces, fail the zone. See, that's already been done here at 65 to 68. Yesterday, I said, listen, bounce zones here, pretty solid up into the 68 region. It actually went into 74, faded, and then tried to bounce the zone again. We've done that twice. So anything below this region, 71, 72, we're going to see more sellers. Here's the second zone that buyers are going to try and hold. It's this 51 area, right? So as we come into the zone, we take a look at our motion, we can see that some of the drift, remember, our histogram measures the distance between these moving averages, and when that distance starts to close, it means how swiftly price is moving in the direction of the faster average is slowing, okay? And so that means we've got a potential bottoming event here. If they win it, if they hold, you can take the trade down here at the 51 to 53, have a stop that's 4-5 points wide, so you've got to watch your risk, and then allow the chart to bounce. If it fails, watch it again, and if it fails once more, coming up from underneath, you know that it's got more downside action. You can go to tighter time frames for that. But listen, just because you assess something and you say, hey, this is the way my chart is supposed to run, it doesn't necessarily mean that it's going to do exactly that. Sometimes you're going to be right, but for whatever reason, risk, whatever, you're going to get stumped out. Turn around, take a look at it, say, was I right in my approach? And you get right back in to figure it out. That's how it works. It's like going to the bat, right? When you're at the plate and you're going to swing, you go, okay, I know this guy's coming with a fastball. Oh no, it was a curve, it was a slider, it was a whatever. You're going to swing and miss. They come back and do it again. That's what's supposed to happen, okay? And that's what we're supposed to do. This is not a game of perfection. This is a game of, can I get up here, swing without getting myself hurt, okay? Sorry, I have to have a baseball analogy. It is an amazing sport. For those of you that do not like it, I'm sorry about that. I absolutely love it. 75-74 or so. becoming very important for the chart to breach. Take a look over here. See this? Old resistance, new support. Here it is, broken and then retested. That's the reason that I choose this edge at 21 versus this edge at 44. But it's really quite relative. If I sit here and look at it and say, well, wait a second, I'm sitting well under that zone. I failed the region. I know people are buying down here, but I can short this into potentially other levels of frontline support and take my trade off quickly, right? Otherwise, it's a stair step down. There's 74.85, and then here's another motion that's sitting here. A lot of us are very concerned about, hey, tweets are going to move price. Listen, if you're a scalper, that's a problem. But a lot of us don't have the skill to be scalpers. If we're trying to scalp and we don't have the skill to be scalpers, that's a rough thing. But any of these areas will spike or fade with noise. But the fact of the matter is the fades, the deep fades going to give us buyers, deep spikes going to give us sellers because we're sitting underneath all the weight of support. If we're underneath the weight of support, that support becomes resistance, pushes down on us. Let's get to the YM. Looking at the YM, same sort of thing. This level here was huge. I've been talking about this level for a long time. We know this zone, 25,580, somewhere around there. It broke, but it did not test the very lowest level here at 25,442, right? That could come all the way down into 375, 380. You know, after that, it's 286 and some change. We have 268, 250. So if you look at around 268, you know that your stop can be 15 ticks wide and move. Do we have a shot at downside pressure? Absolutely. High, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. That's the definition of trend, okay? And it will work until it doesn't. For right now, we see change in the moving average. They are drifting closer together, so the pressure event is quite different here on the bottom. We want to follow the fades down if we're keen on shorting, but be very wise to the fact that buyers are setting up here because these are incredibly important levels. Taking a look at oil, look at this thing. It is a mess, all right? And it's a mess. Well, it's a mess for a number of reasons, right? What we are seeing is a push to the upside here. So that level event is going to matter. And that's going to be right in the middle of congestion. So what do you have to do? Listen, for me, if you look at a congestion area and you see motion, notice the MACD is now positive. And so if we look at the MACD where it's positive, where it goes positive, because these indicators have also the ability to tell us where relative support sits, we can see that it's down here. Of course, visibly, we can see that as well. But this also tells us that. So what we can do is look down here and say, okay, if I want to go long, better I wait for this edge. So if it's wrong, I only suffer a small loss. If, however, I hold this zone and it breaks up and over, I still have this region that I need to come back and test. Again, our momentum indicators give us a great deal of information about price action that we would really ever want to know. A lot of us don't really study momentum indicators quite like that, but they really do give us an amazing amount of information. This going to tell us, hey, we lose this level, likely to bring us deeper, and if we hold the level, it's likely to bring us higher, but it's still a crapshoot. So here's my thought. Why wait for that? Why not just work on the edges? I just do not like participating in the middle of congestion, just not my game. It just isn't. And, you know, sometimes I miss out, but oh well. I'm happy with that. Notice, see all the bullish buying here? Tons of bearish selling, bullish buying, big 4 candlestick formations coming literally, you know, right at near the open of the day. So pullbacks are buy zones for right now. This is my supposition, and most of my indicators are telling me that. Gold also, see, right here, right? We take a look at volume only to assess relative strength, not where breakouts and breakdowns are. I do not like using volume that way. I find it to be completely unreliable. All right, so here's the storyboard. Same kind of upside pressure. Notice, upside pressure breaks down. Upside pressure breaks down. Upside pressure, question mark. Okay, looks really no different than this, essentially, but it is building an upside formation. My thought is still any spikes to the upside are going to bring sellers into the mix. It just is. It's too sideways. There's not enough pressure in any environment, and that's how I'm going to look at it. That being said, my deep pullbacks also buy zones. 1280, love that area for buying pressure event. 1287, they've been selling off. That's been a weekly high, a level that needs to get watched. If we get up and over it, we could run for quite a bit, but then it's going to sell. I would not buy and hold gold in this particular space. I would wait on the deep dips to consider buying over several days and holding. Okay, that's it. I know kind of long this morning, but I wanted to give some more information to you. Good luck trading today.